Hey guys, how are you? Chris French from Bellevue Finance. Hope everyone is doing well. I said I'd do one of these videos per day. I want to keep these fairly brief, but I also want to make it fairly interesting for you guys as well. So if anything you find is of value, please feel free to pass on to anyone that you know who has a mortgage or you think may benefit from this information. Today, I'm going to touch base on what goes into the application pack of a refinance. So let's say, for example, you've had a chat to your broker or you've seen some lender commercials out there. You're noticing the interest rates are quite a little bit lower than the interest rate that you're currently on, and you're thinking it may be time for a change to reduce that interest rate, hence reducing your mortgage repayments. You contact the broker or you contact the lender and you start building the application. This is what goes into it. First, application of lender. Hopefully you can see those. So this is where we build the story of what type of customer you are. Okay, what are your living arrangements for the past couple of years? What are your employment arrangements for the last couple of years? You think of it from a lender or a bank's point of view. They want a low risk customer. They don't want someone that's been moving around from industry to industry every couple of months. They don't want someone that's had 3 or 4 different addresses in the last 2 years. They want someone that's stable, that's been in the same industry for a good period of time, or that's been living in the same address for a good period of time as well. We also include things like monthly living expenses, where we show what we're spending per month so that we can show that we actually can afford the mortgage. Customer ID, this is very simple. Okay, most people I know have got a Medicare card. Most people I know drive, so you should have a valid driver's license and passport. Not that we're going to need a passport for a little while longer, and probably most of them have gone out of date these days. So next, 2 pay slips. Okay, why do we need to put the pay slips and well, notice of assessment as well? Why do we need that? Because we're going to be putting your income down on the application form as well. Joe Smith, who's a mechanic, is going to be earning $100,000 on my application form. So I need to show the new lender that Joe Smith actually works on this in the mechanics and actually earns $100,000, because all the year to date on the pay slips have reset because the end of financial year. So this is my proof showing the lender that Joe Smith actually earns $100,000. The notice of assessment is going to back me up because that's going to show what he earned last year. Savings account statements. I'm trying to get through this quick, guys. Savings account statements. Conduct is very important. So the lenders are not, let me just say that not all lender applications are the same. In fact, hardly any of them ask for the same things, but most of them are going to keep a fairly similar structure that I'm showing you. Where the savings account, they usually ask for 3 months of savings. They're going to bruise through it and just see if there's any if there's ATM withdrawals of large amounts that are pretty consistent, that may raise some questions. If there's gambling transactions, that may raise some questions as well. If there's drive-through liquor, large amounts, numerous times a week, that may raise some questions. So that's the reason why they ask for the 3-month statements. And they also want to make sure that they can see the payments from your employee going into the account as well. Next, credit card statements, personal loan statements, HEX loan statements. Okay, so everything for the monthly living expenses goes into a servicing calculator that we can actually show the lender that we can afford the mortgage that we're going for. Even if we have been with a past lender, this lender is going to treat us like a totally new customer, so we have to prove to that new lender or bank that we're going to be a low risk customer. We have no problems in paying, in affording the mortgage repayments, even with credit card or personal loan or HEX loan statements as well. So all those monthly amounts will be shown on the statement, will be shown on the credit card. They cross-reference, make sure everything is ridgy-dig, and it goes into the application. Next, property valuation. Okay, now for those who didn't see my LVR video a couple of days ago, a loan to value ratio is very important, because if you're under 80%, that's when we can get the more competitive interest rates out there that you generally see advertised on the commercials. Now, the way that we get the property valuation is we go through the lender, probably a third party, to organise a property eval, where they'll either visit the property, take some photos, and work out the valuation, or they may do what they call a desktop valuation, where they'll drive by. Or if it's just a recent valuation that may have been done for any reason, they may refer to that as well. But they usually only last for 3 weeks. So if you had one done a year or 2 ago, that's probably not going to be valid. You're going to have to get a new one. The way to work out your LVR, just touching base on that again, is you divide the loan size of your mortgage. So if you own a $200,000 mortgage by the property value, let's say it's worth $450,000, divide 200 by 450 equals X. That is your LVR percentage. If it gets under 80%, beautiful. If it's over 80%, not the end of the world. You're going to have to pay lender's mortgage insurance. Not the end of the world, okay? Because if you're getting a cash back from the new lender, some lenders out there are offering $2,000, $3,000, $4,000 worth of cash back refinance at the moment. That will offset the amount of lender's mortgage insurance. Plus, you're getting a lower interest rate potentially. So, at the very worst, you get the broker to do a little bit of math, working out the lender's mortgage insurance, work out how much the amount is, subtracting the amount from the cash refinance. Then the lower repayments on the new interest rate that the new lender is going to be offering you. You work out how long it's going to take you to actually get ahead for the new lender. Council rates notice, okay? They want to make sure that there's no payments in arrears for the council rates. They want to make sure that your name is actually associated with the property. Last one, 6-month mortgage statement, okay? Once again, going back to that conduct is very important. They don't want to see defaults. They don't want to see missed payments. If there are, then you want to make sure that you've got some legitimate reasons why that is the case, okay? Whether there was a change of account where the mortgage was paid from and there was a mix-up. Just giving an example there. And that's it. Really, the more organised you are, guys, the quicker these can be put together and the quicker they get put through to the lender and the application process begins. All different lenders have all different waiting times to get this done, but really, the quicker you can get this information to your broker, the faster you can get put together and lodged with your new lender. So, it's only general advice, guys. I just thought pass it out to you. If you have any questions or if you would like a free home loan check, free home loan mortgage check, please let me know. Always happy to help out, and I hope you're going well out there. Enjoy your day.